Hello Wolfpack, quick little update on Bitcoin today. Not a massive amount to cover. I've got another video coming out later on in the day regarding an altcoin that I want to take a look at. But this video, I will just be covering the basics. Essentially, we're in a bear flag formation. If we bring up the Bollinger Bands and we bring up the Gaussian channel, we can see we're on the bottom side of the Bollinger Bands, meaning we're oversold, and the Gaussian channel is offering support, as well as the fact that the channel itself, the bottom line of the channel itself, is offering support. Now, this doesn't mean we won't break down. It just means you shouldn't be entering any long positions while we're on support. That's irrational. It's like, well, you wouldn't enter a long position while we're at resistance. So why would you enter, a short position while we're at support? Why would you enter a short position while we're at support? Doesn't make sense, right? So don't do that. If we go to the, we already know basically the basics on Bitcoin. Zoom out, we can see there's a macro downtrending line. The channel and the macro downtrending line converge together on the 18th of September, meaning we have to make a move either above the macro line or below the channel before the 18th of September. So it's getting there. It's getting there. Look, that's only what, 3 or 4 weeks away, just over 3 weeks away. But essentially, realistically, we'll probably make a move this month in August. So within the next week or so, I think we'll be making a move, maybe a little bit more. And so looking at the shorter term time frame, where it really starts to get interesting, right? Because we're on the hourly chart right now, same channel, same structure, whatever. We're actually forming a symmetrical triangle formation on the bottom of the channel, meaning that there is a chance that we can actually break to the downside, right, before this symmetrical triangle formation reaches an apex, which would be within the next 24 to 36 hours. So there's a chance here. There's actually a chance on Bitcoin we break down within the next 24 to 36 hours. Now, similarly, there's also a chance we break upwards, in which case we'd probably be retesting firstly the level at 21.5k, and then secondly, I'd expect us to go to 22.6k, from which I'd expect us to reject downwards and then finally come down and see the drop. I wouldn't expect us to go much higher than 22.6k. Maybe we go to the 200 week estimate at 23k. Maybe we retest that from a downside as a bit of a resistance support flip. Let's just see how that would look. Right, we could see something like that. Resistance support flip, come down, break to the downside. That's what I would expect. Now, regardless of what I expect, the fact of the matter is it's a symmetrical triangle formation. It can break to the downside. And so if we do break to the downside, if we zoom out, what we can see is that pink line that I have on the screen here is actually the macro uptrending line. So if we break that triangle to the downside and we break the whole channel formation to the downside, we will be retesting the macro uptrending line, from which we'll have one more final chance to bounce. And then if we lose that line, we're going back down to 17k, and we're potentially going down to 11.5k to 13.8k. But you guys already know all this already. I mean, the point of this video, there's really not much to talk about other than that, really. The symmetrical triangle formation on the hourly chart, which is brand new. Haven't looked at that before because it's only formed in the last little bit. That could very well bring us to the downside. So go ahead, go to your trading view chart, draw that up, get it perfect, get it correct, so that if it does break to the downside, you know why, you know what to do. If it does break to the upside, you know why and you know what to do. Quite simple, really. Now, the S&P 500 has retraced back to our target, and this is one of the reasons we think, well, I think that it's relatively likely that Bitcoin bounces in the short term, right? The S&P 500 has reached support now. So it's had the rejection off of the downtrending line. It's rejected and it's reached its first area of support. And so there is a chance we bounce here a little bit before rejecting again and come, or even breaking upwards. We're not fully discounting the bullish scenario yet. I've said over and over, time and time again, don't discount the bullish scenario. It's not worth being discounted yet. It's not valid to discount it because we're still above the pink macro line. As long as we're above that, being overly bearish is stupid. Now, I am bearish. I still think we've got a bottom in Q4, but there's a difference between my opinions and my predictions and my actions, right? My actions are, I'm not positioning myself any differently now than I would be if we were down testing that pink line. The only way I position myself differently is if we break that pink line to the downside. So as of right now, I see, well, Bitcoin's a support, and it's got support below it, and the S&P's at support. That's what I'm seeing. So I'm seeing that objectively and thinking, well, realistically, it's really dumb to short right now, right? Just from a TA perspective. So S&P 500 is at support. Do I expect it to go down further? I mean, yeah, I do, but it doesn't need to happen right now. We could see a small bounce, whatever, who knows, right? But what I do know is that the DXY, for example, is pumping up massively. It's back to all-time highs, almost back to not all-time highs. It might be all-time highs. No, it's probably not. I mean, if we go back, it's probably been here before at some point, right? It doesn't matter. The point is, it's back to local highs, right? So DXY is pumping upwards, which means the US dollar is gaining strength against assets and currencies, which means that it's bad for the markets, right? It's not necessarily this means it's bad for the markets. It's that the markets are bad, and so money is naturally flowing into the DXY. And so generally speaking, when you see the DXY go up, you see bond yields go up. Bond yields are steadily rising. They're not quite rising that much. Now, bond yields, as you might know already, are kind of what the government's, the government's way of kind of giving return to investors who buy bonds. And so how they, determine bond yields is they look at the market, they look at the economy, and they think, okay, the more risky this is, we're going to give more return. It's like more risk, more return kind of thing. So the higher bond yields go, the higher the government deems the market, more volatile or more risky or whatever. And so generally speaking, when the bond yields rise, it means that interest rates go up. And so we're seeing bond yields start to rise again. We're seeing a breakout of a triangle formation there, and we could be seeing more rate hikes due to that, of course. And so again, one more thing I would like to look at here is oil prices. Now, oil prices have been on the decline since around mid-June, which lines up perfectly with CPI releases on June, right, for the month of May, which was the last higher month for Bitcoin, for CPI, for inflation. And so, what we saw is that as soon as oil started tanking, inflation started going down. Now, oil is still going down. However, it is in a descending wedge formation, meaning there's a very good chance we actually break it to the upside, which means inflation would go back up, which would be bad for the traditional markets and hence bad for Bitcoin, because both the traditional markets and Bitcoin are connected to the macro, which is inflation, right? So essentially, oil is in a descending wedge formation. It's probably going to break to the upside, which is bad because it means inflation's not topped out yet. Bond yields are going up. DXY is going up. S&P 500 is on support. Bitcoin is on support as well. But there's no guarantee that support's going to hold. In fact, we probably will see a small bounce, but ultimately it probably will break to the downside. But you shouldn't be positioning yourself for that to happen until it actually does happen. We do need the confirmation for that. So that's the video, guys. Covered some stuff I've already covered before, but ultimately it's worth doing daily videos because people need reminders first and foremost, because when you don't get reminders, you forget and you end up making irrational decisions. But what we've covered here is new content, new information, particularly, and I want to emphasize it one more time because it is important, the symmetrical triangle formation on the hourly chart. It is very much worth drawing up. You guys should do that. I recommend it entirely. Now, before we end the video, I want to look at a few things like usual. Wolves Crypto VIP, go to my YouTube homepage, click the join button, and you'll gain access to all of these perks. Trading setups, prioritized reply to comments, a 2-hour lecture on market psychology, exclusive Telegram group access. And then, again, we want to emphasize here, BitGet Exchange. If you don't have an exchange that you trade on, or if you have an exchange that you trade on that you're not quite happy with, or if you just want an upgrade, sign up to BitGet. It's decentralized on your end, no KYC. It's got 5 times lower fees than Binance, which is absolutely insane. It's got systems in place to prevent exchange-driven scam wicks, and it's got a protection fund, which means if you lose your funds on the exchange, there is a chance that you can claim back those funds depending on how you lost it. And lastly, it's got a reward center that you can gain access to if you sign up using my referral link in the description or pinned comment below, which I'd appreciate. And then, of course, we've got the Crypto Academy, Become a Trader 10-unit course, which is a 10-unit course in PowerPoint, video format, worksheets, trading diary, that's teaching you how to trade, teaching you technical analysis, teaching you how to analyze a market and act accordingly according to the analysis. If you want to become a 63rd student, you can sign up by emailing us here at cryptoacademycourses@gmail.com, and we'll get back to you with all of the relevant payment information. Thanks for watching, guys. Hope you enjoyed the video, and I'll catch you in the next one. Cheers.